But Kunal is here in the studios. Kunal, hi, morning. Is this week going to be as impressive as last one? Will we manage to hold through or build on further?
Yeah, it should be. And I think with the data corroborating that the FIs have started to buy in the last couple of days, especially with the quantum of buying adding, the tide seems to be turning for the indices. And for the good of the market, of course, we've seen excellent texture of the markets in the last few weeks of this market rally, because not just a 1200 1300 point recovery for the index, but broad-based move across sectors, across large cap names, participation from high beta sectors, fresh large cap names making new highs for themselves, whether it's on the banking side or from the other sectors like metals, etc. So when you see such kind of a strong up move into the overall market breadth, that generally gives an indication that this is a rally, this is a trend which is here to sustain as well as build up. Now what we look out for is the technical pattern when the markets move up higher, and in this phase of the market up move of this last 1200 plus points, we've seen two gaps being formed for the index as very strong supports. Now these gaps, I think, could probably play a very critical role whenever the markets get back into a bit of a consolidative phase. And the first level of support, which I would believe is a very strong support now, would be at the 23,000 mark. So traders could hold on to their long positions, keeping 23,000 as a stop loss. And my expectation is now over the next 3 to 4 weeks, we could be looking at 24,000 to 24,200 as a potential target for the index.
Right. So Kunal, what would be your stock bias, given that broader markets also did well?
So, it's a good mix of large caps and mid caps. The first one is NTPC, something which is very interesting on the charts. That started to look very attractive. We're looking at a breakout potential about 350 levels. So look out for targets in the range of 366. Stop loss could be kept at 345. And the second would be AB Capital. That's a chart which has managed to make a very good comeback, trading above 180 mark. Would look out for targets in the range of 196. Stop loss at 180.
Okay, let's welcome on board Naresh as well. Naresh, what is it that you're playing for? Morning, firstly. You think it's going to be a continuation of last week's rally?
So the momentum is strong. We've had quite a few sessions which have made a move. And also the move is not just large caps, it is across the board. So you've seen the large cap, the mid cap, as well as the small cap indices, everything do well. So do we get a pause? That's a tough call. But for now, a new base would be closer to 23,000 and 23,800, which is the previous top. That should act as a resistance going forward. So we could be forming a range at a much higher base compared to the 22,000 base we have seen.
Stay with the market. Another 5% is coming. Do you think that trade is a better trade rather than selling on uptick? Naresh?
Yeah, so the view would be to stay with the market, sell closer to 23,800.
What end of the market one should be selling, Kunal, saying that, okay, it's a trade where I bought, stock went down, now it's come up. Use the strength and get out. Not everything will go up. Not everything will go down. Where do you sell and where do you stay in the market?
So, excellent question, Nikunj. There are three pockets of underperformers in this phase of the market, sector-wise. The first is auto, FMCG, and largely to a larger extent, of course, the IT index.
The three underperformance. FMCG is underperforming. That's HULs of the world.
Correct.
Autos, largely Tata Motors, and even Mahindra has started underperforming now.
Correct.
Looking at data. Correct. That's second, and third is IT.
Third is IT.
These IT are the underperform, matlab wo to ghus hi gaya.
Yes. So these are the three sectors of underperformance. So there would be a phase where there would be a rally into these stocks, but the rally would be very shallow as compared to a rally into any other performing name, whether it's banking, metals, infra, energy, etc. So what you have to do is that look out for a phase where there is a trend into certain sectors and there is just a bounce back in certain sectors, and that bounce back is a very good time where traders could look at exiting positions.
No, so let's say we have 1200 points on the Nifty, 1300 points to be precise. Another 100 point gets added, 1500 point plus minus 100 points. After a 1500 point bounce, markets are not oversold. They've normalized.
Yeah.
So your view is that use the strength in FMCG, autos and IT to par down your position.
Exactly. Yes. Okay. And then build up into some other performing sector.
And that would be energy, to a large extent banks and metals.
Correct.
Naresh, would you concur with Kunal's view?
Yeah, very similar.
Okay. Specifically in energy, Naresh, what do you like?
So for now, I would be waiting out for taking fresher bets, continue to ride on to the move. So for now, a lot of names have already bounced back. So one has to be a little more careful on this sector as well.
If you like this video, then like, share and subscribe to ET Now.